And welcome. This is Mary Ellen McGonagle with your Friday afternoon MEM Edge show. As always, the show where we bring you where the action is in the broader markets. A lot of action, not all of it positive last week, of course. Let's take a look at some of those news that drove price action last week. We did get retail sales and it rose ex autos. Not a big response there. Home building related data came out last week as well. Confidence did fall to a 7-month low. However, housing starts came in bigger than expected. We're going to take a look at that housing group as we move through today. And jobless claims jumped yesterday, and that really spooked the markets a bit. We'll take a look at some of the other news that drove price action last week, and it was quite volatile. I will tell you the Trump trade is alive, and by that I mean comments that former President Trump is making are really moving the markets. Now, that does tell us that confidence in the current uptrend or prior uptrend, we'll take a look at those markets, is not stable, certainly not as stable as it was earlier this month. Also, we did see AI-related stocks lose their luster. We'll get into that and much more. Of note is the fact that next week, very impactful inflation data. That's going to be that core PCE data. This is what the Federal Reserve pays very close attention to. We've had good inflation data numbers of late, so we don't want any surprises there. We'll want to be on the lookout. So let's go ahead and take a look at these markets and see where did we close for the week. And here we are, the S&P 500. As noted, we did close the week below this 21-day simple moving average. And for those of you that are not familiar with my work, I do a lot of work with moving averages by way of identifying possible support and resistance, so that we did close below that 21. Now we are on the lookout for this 50-day simple moving average as the next area of possible support. Not a great place to be, because that RSI closed the week in negative territory. Also of note, we did get pretty high volume on last week's selling, and I talked about this in my midweek MEM Edge report as far as keeping count of those higher volume down days over the last several weeks and the negative impact that that can have. Also, we had that negative MACD crossover. We are still here in positive territory on the S&P 500. Now, we would be remiss to not take a look at the Nasdaq. The Nasdaq was hurt quite a bit more. The S&P was down 2% last week. The Nasdaq down 3.7%. And we also closed below this key 21-day simple moving average. And for the Nasdaq, if we go back historically, even back to the beginning of this year, it generally has been able to hold support above that 21. This is that period of rising interest rates that pushed the Nasdaq lower. Keeping an eye on that volume. We are getting pretty high volume selling shaping up here in this tech heavy Nasdaq, and not what we want to see, of course, with this market and with the Nasdaq, certainly if you are in particular names that are heavy weighted in that index. So we're going to walk through some of these sectors within the S&P 500, the 11 sectors, and I have a 2-month daily chart view with that relative strength indicator, descending order, and this is where we really get our arms around rotation. We talked about this over the last week or two as far as rotation that has been shaping up. So let's take a look at where we stand after this past week. And of note, REITs, this was a group 2 weeks ago that I cited would benefit from a declining interest rate environment. Back in here, we have seen a nice advance. It remains up here at the forefront. and then financials. Now we are in earnings season. Many of you I know are very familiar with that. We did have Netflix come through last week and some big key earnings next week as well. But this week, it was all about these smaller banks and these regional banks, and they are coming in with solid numbers. They're coming in above estimates, and in response, we'll take a look at that bank group as we move through. So looking at some of these other groupings up here at the forefront, consumer staples. And I'm going to share with you the chart of that staples, and note that on Thursday, the consumer staples group did hit a new high before pulling back a bit. And of note here is that general move into these more defensive areas. I believe Coke hit a new high and any number of other stocks. Energy up here at the forefront and industrials. These are cyclical value plays of note. And then healthcare. This is another more defensive play on stocks, is a move into the XLV healthcare ETF. Utilities, they did falter last week. They were down 1.6%, but still in that upper quartile when we're looking at these 11 sectors. So of course, from here, you do want to be very aware of where the weakness is beginning to emanate. And this is XLY, the consumer discretionary sector. Heavyweights here are Amazon and Tesla, but we'll take a look at another sub-industry group that is pulling back a bit here. There's that black line down through the red MACD crossover, and we'll keep an eye on this group as well. It's very selective as far as areas that are working here. And then moving through high growth XLC, communication services down here in that lower quartile, and we have to take a look at technology. XLK, it was down 5.5%. Quite the haircut last week. We are finding support just at that 50-day simple moving average, but we do now have a negative RSI. We'll take a look at some of the sub-industry groupings within tech as we move through here today. And then also of note is that black line down through the red on the MACD. And for those of you not familiar, quite simply, it is indicating that this uptrend that took place in the beginning of July has stalled, and in this case is now declining. And it's not a sell signal, but it is certainly telling you that weakness is very much present in this sector at this point in time. Moving through, taking a look at sub-industry groupings, and I have ETFs that I find to be very helpful. Again, staying on top beyond those sectors, you want to get those industry groups right as well. 2-month daily price chart, and take a look. KRE front and center up almost 8%, 7.5%. We can see this gap up into a base breakout and a continuation rally. Now, we are certainly overbought at this point in time, on the lookout for some consolidation, but it was front and center performance-wise, again, mostly earnings driven. And then here we are, XHB. This is the home construction last week gap up on that solid inflation data that is pointing toward a possible September rate cut. And you can see that this week we had a good start to the week, but rather fizzled a bit into the end of the week. But net, that uptrend still very firmly in place in the home builders. And small caps, there's been a tremendous move. This is IWM, the Russell 2000 index. Take a look. Now, when we talk about volume on selling, you also want to note volume on the upside and rally days. And we got tremendous volume indicating a continuation rally possibility. And this late week pullback, very, very naturally, you can see we got into an overbought position with these small caps, very fast move into the group. But from here, for those of you that are longer term in your trading outlook, as with any index or broader view of the markets, you want to drill out, take a look at that longer term chart. We're looking at the weekly chart of small caps. And of note is it has been a while since small caps have had any kind of a pronounced move. You can see the metrics by way of momentum are still early in their advance. And then the overall volume last week in those small caps. So look for more potential upside price movement in IWM and those small cap stocks. Moving through, taking a look, biotechs, IBB had a great week last week or the prior week, and all about investor confidence. We did see a pullback, but it's that same concept with that RSI in an overbought position. We're pulling back very orderly to this upward trending 10-day simple moving average. So generally still another quite constructive area. Now from here, I talked about consumer discretionary. This is XRT and it's the S&P 500 Retail ETF. And you can see that over the last 2 days, we have seen selling begin to develop. We have that RSI just dipping into negative territory and pulling right to that 50-day simple moving average. So on the lookout for potential weakness there. Now it is a broad group. And as stated, there are areas that are holding in, but overall it's not exhibiting that strength that we saw the prior week. Now talking about technology and the Nasdaq, here is a view of software stocks, IGV. It is the tech software ETF. And you can see here is that pullback. Certainly anyone that follows the market will know CrowdStrike was hit very hard today. And then we did see other cybersecurity names react. Also, we can see the IGV RSI now in negative territory. And there again is that crossover, quite simply indicating that this uptrend that we experienced in the month of June stalled. And then now we are in a downtrend super near term on those software stocks. Of note, even more important from my work is the fact that semiconductor stocks are in negative territory. Take a look, that RSI well below that net neutral 50. We did break and then close below this 50-day simple moving average. Take a look at this volume on this selling. Now, this is where that Trump trade that I mentioned does come into play. There was also Biden administrative talk as well relating to semiconductors and restricting exports to China. However, former President Trump did mention Taiwan, and they are major suppliers of chips. And in turn, his potential policies that he is alluding to if he's elected may not benefit this area, certainly politically. And this is where that political unstableness can really override the strong fundamentals. Taiwan Semi came out with numbers last week. They were very good, but you can see net that this trade is not looking constructive at this point in time. We have that negative MACD as well, crossover. And as usual, the markets do not like uncertainty. And when we have these outside talks and efforts to tell what Trump is going to do policy-wise, you can see the response is pretty strong here. From here, I will go ahead and share with you a quick view of that volatility index. This is VIX, and you can see that we are now up at about that 16.5. Now, this is where it starts to creep up and get potentially irritating as we maybe move up above that level. Certainly if we get up to 18, that would be very notable. This is that August pullback that took place. I talked about the rise in interest rates and the pullback in the markets. And here's that subsequent move in the volatility index. Of note is that we have closed above that 200-day simple moving average. And those that follow the VIX will know the significance of that as it points to potential more upside on that VIX. Again, all about uncertainty politically and otherwise. So from here, I did want to share with you a view of Nvidia. We are going to take a look at the other mega cap Magnificent Seven names. We'll walk through those each this week. But what I wanted to highlight for you here with NVIDIA is a weekly chart. Many of you may be involved with NVIDIA. You'll want to get a different view chart. And what I wanted to highlight for you is this advance coming out of that 2022 bear market. And we had a very sharp advance into the middle area of 2023. And from there, we had a very lengthy sideways price action here that lasted almost 5 months. And it is very natural for a stock, given its move from this 12 level, quite a sharp advance, do a period of consolidation. We can see how overbought we were up here in that 2023 period. As long on the weekly chart that RSI remained in positive territory. Now, this is a stock that I added to my MEM Edge report in January of 2023. And during this pullback period, I advised subscribers to stay with the stock through this consolidation phase. And then from there, we did experience another leg up. Now, this is the beginning of this year. And then here we are with another building of a base, another leg up. So all very orderly at this point in time. For those of you that own the stock, you may be inclined, if you are a near-term investor, to lighten up. But at this point in time, the longer-term weekly chart remains constructive. Now, from here, I also wanted to share with you, we talked about cyclical stocks, value stocks moving higher. This is a comparative chart, again, on stockcharts.com, of course. And what we're looking at is VUG versus VTV. These are two Vanguard funds. VUG is their growth fund, and VTV is their value fund. And this line, the straight line, is the value fund. And then the bar chart here is growth, VUG. And really what I wanted to highlight and point out is the fact that we can see these groups move in tandem over time. Here's value peaking in April. That overall pullback that we saw in the overall markets in a rising interest rate environment did hurt both groups, but it did hurt growth a little bit more. So here we are with the recent advance in value stocks. You can see that move where it peaked above growth, but it did pull back into the close for the end of the week, for me, indicating overall weakness in the markets, again, due to uncertainty. Now, from here, let's go ahead and take a quick look at the Nasdaq 100. And this is, of course, where we had the Nasdaq pulling back quite a bit last week. And a couple of items that I wanted to share with you that you can very quickly assess with this view, taking a look at what's called the 5-day performance. These are the stocks last week that advanced the most within the Nasdaq 100. Now, there are a couple of things that you can do very quickly, and one is to overlay your cursor on top of that. And I'm not sure if you can see this view, but you will note that these better performers appear at the forefront, and that would not include CTAS, but by and large have been underperformer year to date. And you can quite simply go either to this year to date or that 1 year view. And you will note that a number of these top performers have not fared well year to date. So we are seeing a bit by way of bottom fishing. Most of those names that are up year to date and are rallying have either reported earnings, CTAS, or they are due to report earnings and they're rallying into their numbers next week. Now, this is just something of note that you will want to be aware of, because as we drill down to these underperformers, we talked a bit about CrowdStrike, but net over the week, you can see double-digit downside and a lot of green on that 1 year and year to date. So a lot of this strength going into the second half of this year is pulling back. And I talked about taking a look at those mega cap names. We did take a look at Nvidia. Let's go ahead and take a look at Tesla. And this is another Trump-related trade. He did state at the convention this week that the very first thing that he intends to do is to relinquish the EV credit, which in turn pushed, in this case, Tesla down 4%. We did see any number of other auto and certainly EV-related stocks pull back sharply. This is Ford down 4% today. But let's take a quick look here at Tesla because we are at a point here where the stock is pulling back from an overbought position. We are in the throes of a potential black line down through the red with that MACD. And of note is taking a look at these strong high volume characteristics here on the stock on this rally period, and then a lightening up on selling. Now, I will say the stock is due to report their earnings next week, so you will not, in my case, want to get in front of the potential train. But we can also see that the momentum is shifting a little bit to the downside. Those numbers are going to be really critical, but also noting the weekly chart because Tesla has not been a big outperformer similar to the M7 names, and you can see relatively we are very early in a long-term move. Of course, that weekly, the earnings next week will have a lot of impact, and of course, broader market price action as well. Moving through, taking a look at Apple very quickly, it did pull back. This has been one of the better performers near term, AI related, but on the daily chart, still looking constructive. And as we move through, Alphabet. Now, they are also due to report their earnings next week and take a look. We now have a negative RSI, and we did close below this key 50-day simple moving average. And of note is the fact that we can go back to prior earnings releases, and the stock has a history of gapping up if they come out with good numbers. And certainly next week will be a test for the markets because we are not sitting up here at new highs. We have pulled back going into the report. So net near term, not constructive on Alphabet. And then Meta Platforms. I talked about this last week because it was one of the M7 names that was exhibiting weakness. And sure enough, it did in fact carry through. We are now down below that 50-day simple moving average with that RSI down below 50. And then we have these shorter term moving averages that are beginning to trend downward. And that when you have that shorter term moving average below the longer term, that's known as a death cross. Now, it's not a definitive signal. It is a secondary signal, but we need only go back to this late April period, similarly with those moving averages trending downward, and see what in fact it did lead to. This is the release, I believe, of their earnings gapping down. They are not due for another week or so with their earnings report. Microsoft really underperformer relative to the M7 names year to date, but very similar price action to IGV, negative RSI, close below that 50. So net, you will, if you are a near term or shorter term investor, you're going to want to pay attention to those negative momentum notes. Also, price breaks below the 50, and longer term investors go ahead and drill out to that longer term chart. And also taking a look at Amazon, we can see that it too has broken below key support, negative RSI, MACD just now poised to go into negative territory and pretty high volume on that selling. Last up, we're going to take a look here at Netflix. They came out with earnings and the numbers were above estimates. However, Netflix a little cautious going forward. So we can see this close. Now, this is a negative candle, negative engulfing candle, where we had a period today where the price was above yesterday's close, but we closed below yesterday's low. Very high volume, negative MACD now joining that negative RSI. So that's a close view of those M7 names. Again, you'll want to pay attention to the chart. And then next week is going to be critical. I did want to highlight for you very quickly those companies that are due to report their earnings next week. This is Earnings Whispers. They put out this piece that uses the logo for these various companies. But up here, they cite the larger names that are due to report: Tesla, CMG is Chipotle, Alphabet, Verizon, and so on. So we do have a big week coming up relating to earnings, and we'll see, because historically earnings do drive those biggest movers. We saw that last week. Despite volatility in the markets, the biggest movers in the S&P and the Nasdaq were by and large earnings driven. And with that, to recap price action last week, we did see nice moves into those companies that reported above estimates. Certainly banks would qualify. However, we have seen more of a move into defensive areas of the market. Of note, keep your eye on that volatility index. As noted, it does indicate it's also known as the fear index. And lastly, taking a look at value versus growth. There is an ability for them to move in tandem. However, those M7 stocks are pointing toward weakness in those mega cap related tech names. If you like what you've seen today, go ahead and hit that like button, and I will look for you again here next Friday.